Yeah, I'm Hans Vrensen. I run the research team at AEW. We support all of our business lines, but one of our biggest business lines is our logistics fund. We have a logistics fund that's been going for about 15, 20 years. It's built up a portfolio over quite a few different countries, including France, Germany, Poland, all over Western Europe, really. And so we help them with market updates, with acquisition data that they require, and give updates to the LPs as well.
Peter, yeah.
Yeah, my name is Peter Kunz. I'm running the industrial logistics business line at Colliers International for the EMEA region, covering 39 countries. Of course, we are working for landlords as for occupiers and developers in the whole region.
Great. Claire.
Clare, so as you know, I'm a partner at CMS, the 6th largest law firm in the world, and delighted to be working with a variety of logistic clients and some on the panel with me today.
Great, thanks. Anthony.
Yeah, hi, I'm Anthony Butler. I'm the Chief Investment Officer for Delin Capital Asset Management. We're a pan-European developer, asset manager and investor, primarily investing in Benelux, Spain and UK, and targeting Germany and France next.
Great, Dirk.
Hi everybody, my name is Dirk Sosef and I oversee the European Research Strategy team at Prologis. The only thing I do in my daily life is work with logistics. The company has in Europe around 18 million square meters of logistics space. We own for the long term, we develop as well, and we're active across 12 countries in Europe.
Let's look at the overall performance of logistics. You've obviously got the logistics fund that you're investing in. Do you think that logistics property is set for the continued kind of growth following, what Claire put in her slides there, that we've had this growth? Do you think that's going to continue, or do you think we're approaching a plateau? Where do you think we are in the market?
Yeah, I mean, that's of course a quite hard question when you see a run-up as what we've had over the last 2-3 years, I would say. And on the occupational side, the dynamics still look very attractive. I mean, this trend about e-commerce demand is not going to go away. It probably will spread over Europe. I think the sort of penetration rate that Claire already mentioned, we can definitely see that other countries might be catching up to the UK to some extent. However, it'll probably be just a question of how much new supply will come into the market, because we shouldn't forget that in the history of this market, new supply has typically spoiled the party. Now, it's also meeting an investor requirement, which is very difficult to serve with the current stock that's available. And not only investors, but also, in fact, occupiers, because some of the stock that is in the market today doesn't serve the up-to-date need of the most advanced occupiers. So we do need new stock. It's just that what would be very good is to avoid having too much of it. And so the outlook really will depend on that over the next sort of 5-6 years, how much new supply will come into the market, and how much space will be added as far as what the long-term outlook is.
Okay, good. And Peter, just in terms of the overall mood of the market, what are you seeing? Are you seeing exuberance? Are you seeing sort of a hint of caution? What's your sense of the market in general, specifically for logistics in Europe?
I think you have to differentiate. As you said before, it's driven by e-commerce, the change from the classic retail to e-commerce. It's also driven by a high demand out of a very positive environment in the whole economy at the moment. So there are a lot of drivers driving the market, a lack of space, a lack of land. So this environment is, I think, good for a long-lasting positive development of this sector.
Okay, good. And Anthony, you mentioned that you were contemplating moving in towards France and Germany and extending your portfolio in the areas that you're working in. What's specifically driving that for you?
I think the European market, logistics market, is improving. It's been behind the UK in terms of rental growth. That's Europe traditionally hasn't been a rental growth prospect for logistics, but over the last few years we've seen that transform. So I think for us it's a really great time to start diversifying our business, diversifying our clients' exposure and also accessing markets which we believe still have a lot of potential in terms of rental growth, and obviously stock that we can acquire and also develop in those markets.
Okay, good. Yeah.
Interestingly, we were at the CBRE Global Update earlier today, and logistics featured in that quite heavily, and the view was strong rental growth to come for the next 12 to 18 months.
Okay, good. And you're obviously, Dirk, looking at, as your role in sort of research and strategy, you're looking, I guess, across the world in terms of what are the next key trends. So just give us an update on what you see as the big trends that we should be looking out for in this industry.
I think when you look, when you compare Europe with the US, a lot is to come. First, we just covered briefly rent growth. I talked to a colleague in the US. They said that the net effective rents in the US are on a national level 20% above prior peak, 20%. We are in Europe 5% below on average. In CE, Southern Europe, roughly 15 to 20%. So we are way back from, we are really lagging in comparison to the US. What I think is important about Europe versus US, and let's say trends inside the world, is that it's really difficult to compare markets. One stat is, what I always like to share is when you look at the modern stock, let's say the institutional stock of logistics space per consumer household, Europe 2.5. Every household has 2.5 square meters of logistics space. US is 3 times more. So we are lagging. We are lagging significantly, we are lagging strictly. So when I think about the long-term growth of our market, I would, and this is more the long-term growth, I see ourselves right now in the life stage as a 20-year-old sector at adolescent. We came from the teenager years 10 years ago, now becoming an adolescent, but we are by far not mature yet, so I see a lot of growth.
Yeah.
Yeah, maybe just to come back to that US point, I'm not sure if shooting for the US sort of ratio would be a good target, because of course retail space in the US is about 5 times as high as in Europe. That doesn't mean that it's a good idea to have as much retail space in Europe as it is to have in the United States. But apart from that point, I fully agree with your assessment, and that is of course that there is a need for more space. The difference is also that European occupiers very much still own a lot of their space. So there's a lot of owner-occupiers of space that doesn't make it into the institutional stock. So investors are not really able to access that part of the market, because occupiers, especially on the manufacturing side, still own significant distribution warehouses for themselves.
Which is questionable whether you want to be on the manufacturing side. That's a big debate you can always have. So you have a supply chain from manufacturer to the consumer end. We prefer to be on the consumer end of the supply chain, because there is demand much more solid, stable, and for structural demand. Well, of course, you can't move a city with the demand. You can move, a manufacturer can move. So therefore, we prefer to be on that side. And indeed, about the 2.5, 7.5, for sure there are differences in wealth, in, let's say, geography, efficiency of the market as well. But what I want to highlight with the 3 times more is just about the gap we see in Europe, because Europe is still a relatively young market.
Okay, good. And maybe for you, Peter, what are we seeing in terms of availability of product, and what are we seeing in terms of rental? Clare there mentioned that she was expecting, or CBRE were expecting that. What's the Colliers view on that, and what does that mean for development?
Even here you have to differentiate the countries. If you go to Poland, for example, in the Lodz area, you've got a pipeline of 500,000 square meters. If you go outside the EXPO Real to the Bavarian area, or especially in the southern part of Germany, we are totally sold out. There's nothing left, no space available, no land, no stuff. So it's it's a bit of a difference where you look on. In Germany, the market is about to overheat because it's spec buildings without any user inside. But I had an interview this morning, and this lady from the newspaper, she asked me, who is looking for space and where? And I said, especially in Germany, everybody's looking and everywhere. So it's no top 7 anymore. Even in the Netherlands, it's a top country. If you look on the Benelux, Netherlands, UK, Germany, it's top countries, and it's not top markets anymore. And Czech Republic as well, no, an absolutely low unemployment rate, no workers. So the logistics companies, the 3PLs, will send out buses to collect workers from other countries. Like one of them, CTP in Bor in the Czech Republic, they build up 250 apartments beside their logistics park to host the workers. So you have to look on it. But if you're talking about UK, Benelux, Germany, Czech Republic, it's an absolutely lack of land and lack of workers, sold out.
No, it's an interesting point. I had a discussion with CTP we were doing an Outlook session in Romania earlier in the year, and it struck me that it was rather like the mill owners in the UK in the sort of 1700s who were building houses for their mill workers to come to create the space for them. We've just done one on the UK and London here, so I just wanted to get a sense from you, Clare, of in terms of Brexit and the UK market, big impact on the logistics sector potentially or not? What's your view?
It's interesting actually to pick up on Peter's point about workers. 90% of the workers in UK logistics come from the rest of the EU. They're not within the UK. So I think that's causing a really big concern.
But not any longer.
Yeah. So that I think will be an issue. I think the retailers that we surveyed were concerned about customs regulations being tightened up, and of course then there's also the brand status and how the UK retains its position as a sort of top retailer and brand to the rest of Europe.
Okay, good. And
I'd like to add something. There's one project of a big automotive company building, let's say, a gateway, a tax gateway in Germany for the export business outside of Germany, especially to UK. Yeah. So this has an impact on the market, on the demand in Germany. So they go for a 50,000 square meter warehouse at the moment to handle their outgoing business to the UK, expecting a Brexit.
Okay, good. And Anthony, from your point of view, you're obviously looking at the UK within those other areas in Europe. What's your thoughts on that? Has it led to any change of strategy? Interestingly, we just had Sven from Credit Suisse Asset Management saying that although they'd had a pause in terms of their view on the UK, he was buying into funds, not buying direct, but one of the funds that he had bought into was UK logistics because he thought that was separate to any other discussion. So what's your kind of thought on it? How do you see it?
I think we take a long-term view in terms of UK and Europe. I think both have its attraction. So for us at the moment, if you want to go long in logistics, you shouldn't necessarily worry about Brexit. And at the end of the day, the fundamentals for the UK are that there is a high demand ultimately from the e-commerce side of the business. You've got scarcity of land, which is really quite critical, and I think that as a result, you'll find that at local level it will still perform, and I think it has longevity. But you just need to, you just have to take a long-term view. In terms of Europe, for us, our investors either look at UK or Europe. I think a lot of them are taking a pause on UK, and I think they also think it's end of cycle. And I think then, I think one of the quotes in the paper is just making sure that you underwrite correctly going forward, especially on development where land prices in London especially has gone completely crazy. So, but land is a critical thing, and actually a lot of countries are beginning to control it significantly, and that's the supply piece. In Holland, for example, we've have an extremely large development program, and municipalities now are really sort of raging against spec development. So they want to work with an occupier. So if you need to go forward and develop, you actually have to have an occupier-led solution. And I suspect that in Germany they're changing. Don't develop on greenfields. Have a look at developing now on brownfield. And there's a real kind of push towards restricting the greenfield release. So I think there is plenty of demand in these sort of countries. And I think it's just really then how you control the land and how you develop, but making sure you keep sensible underwriting assumptions.
Okay, good.
Yeah. Maybe if I just add, I want to pick up on something that Dirk said a little bit earlier, because from a consumer perspective, I think Brexit will throw up a few opportunities as well. Of course, as a European living in the UK, I've got my own sort of personal things to deal with, but if you look at the business opportunity, it actually could be quite significant. So, for example, right now, most UK consumer goods probably come in from Asia or the US into the continental European ports of Rotterdam, Hamburg, and Antwerp. Then they put the container on a truck, it goes to the UK. Under the Brexit scenario, if that doesn't work any longer and we go to whatever trade rules that we have, the container ship will probably have to go directly to the UK to avoid the import duties. Now, that means that UK ports probably will have more business if you follow that logic, because it cannot go into the European harbors anymore. It has to go directly into the UK. So from that perspective, there could be actually a massive opportunity. It will be a reshuffling of the supply chain, and that will be painful and a little bit time-consuming maybe. And it won't be fun, but in the long term, the consumers of the UK will still be there. Maybe they're not quite as rich as before, but they're still some of the wealthiest in Europe. So
yeah, and that's important. So the choke points at the ports, you will see that. You can expect that. But one thing to be aware of with the UK market, the logistics market, is that demand, that let's say the role of the supply chain is really different when you compare the UK with, let's say, Southern Netherlands. Southern Netherlands is a pan-European gateway. Logistics is focused on international trade, while the UK market is really much more driven by, let's say, the domestic demand, the consumption. So there you have a different role of the supply chains, and there you see less, let's say, impact. Be aware, I think there's a big difference when you think about Brexit, about perception and reality. The day of the Brexit referendum, our stock went down by $2. But at the same time, since Brexit, vacancies in the market, lowest ever seen. This quarter, so only the news 4 days are old, let's say a week old. Vacancy again dropped in the last during the summer. So in general, the market is in good condition, but continue to monitor it, especially trader developers.
Okay, good. Anthony, I just want to pick up with you as well. What are you seeing on, let's say if we're looking at challenges, what are you seeing as a block on your ability to be able to grow? What's your, what's blocking you? Is it to do with lack of land? Is it to do with the inability of what you mentioned there with local councils, local government? What are the blocks on your business?
Competition. No, yeah. I mean, look.
I noticed you trying to push him off earlier.
It's an incredibly, actually on the competition, it's an incredibly crowded space, but a very close fraternity. I mean, so it's made up of kind of big national pan-European businesses or big local heroes in various jurisdictions. And I think, I think there's enough to go around just simply because where I think future demand is. I mean, some of the blockers are simply getting a hold of land. It is expensive. There is also sometimes a conflict with that land. If you look at, in London in particular, the conflict between JLA wanting to retain employment use on certain sites versus the local authorities or local boroughs wanting to create social housing. And then it drives it towards a mixed use solution. And so I think we then need to be a little bit more sophisticated in terms of how we address sites. I think actually one of the things that a lot of us have come across, whether it's Prologis, Delin or whoever, is construction and construction costs, construction availability. I mean, if you want to get a hold of, piling rigs, it could take you 6 months to a year in Holland at the moment. Construction costs have gone up there 20%. So while you're underwriting, you need to start factoring in, construction cost growth. Your rents are, clearly growing, but not perhaps as at the same rate as construction. So there's multiple things which are having to, take cognizance of whilst you're looking at the development cycle. So, and also, we haven't really touched on it too much, but even occupiers are starting to make demands in terms of their CSR strategies that they have. You know, are you producing a BREEAM excellent building or very good? You know, what sustainability or your occupational benefits do you have? Solar panels and that sort of thing. And there's so much change going on anyway. I think that causes us some sort of concern, but ultimately it's a multiple thing: land constriction, planning constrictions, construction constrictions. Actually, I think the demand is there, quite frankly, and it's just making sure that we translate those into economically viable solutions.
Okay, good. The sustainability was something really interesting in the report. And in terms of challenges, that was seen as a much bigger challenge by the retailers than it was by our real estate professionals. And I think the retailers really see their green credentials as an extension of their brand. You know, we have the amazing Nike new logistics HQ in Belgium, where they have a grass roof and they have canals instead of roads. So I think maybe the real estate companies, developers will catch up on where the retailers are in their demands for sustainability.
Okay, that's interesting. Peter, just quickly to you, in terms of the, I mean, we mentioned there between, I'm trying to avoid using the word shed after the quote that you put there. In terms of urban logistics versus bigger box kind of out-of-town logistics, what are you seeing in terms of the demand for those two, and are they being priced accordingly?
I think the big box business it's not, let's say, done, but mostly it's maybe 80% structures are done now, and the big players like the Amazons and others, they are about to shrink down their sheds, getting closer at the edge of the cities. And for example, Amazon in Germany has got like 50, 60, 70 requests for smaller warehouses beside the cities. And we are at the edge of this, from the big box to not into the city, but at the edge of the city. I was too fast.
You were slightly faster than I was expecting, that's for certain. No, that's good. And we've obviously got here as a title, The Future. So, Dirk, in terms of, let's look at, what's shaping demand, delivery times in urban, will we get to under 30 minutes? What are we seeing in terms of electrification, automatic driving vans? What are you seeing in terms of the future? What's sort of slightly ridiculous and we're never going to see? And what do you think is reality that we will all see, let's say, in the next 5 years?
First, and I 100% agree with the quote as well, I believe that a warehouse is not a box anymore. It's changing. We see it everywhere. It has to do with the sustainability, but next that has to be with the well-being of the employees working inside the warehouse. Let's say, extreme-wise, 20 years ago it was just a concrete wall and floor. And some lighting. Now it's much more almost like an office with filtered air and etc. So I think that's an important one, how the warehouse is changing. I think another one which is really interesting is about the automation. How the automation is impacting our sector. Where does it lead to? Just to get a better understanding about supply chains again, when you think about the real estate costs in a total supply chain, it's 5 to 10%. The major cost factors for transporter are labor and just the transport itself, the fuel. We did a study, and when with automation, let's say an occupier could save roughly 1% on those big cost components, that's equal to the potential rent growth of 15 to 20%. Because the market gets so much more efficient that kind of those big cost factor savings can create a big potential for the rents.
Okay, good. And yes, go ahead.
Yeah, maybe just make one point. I mean, it's all great to talk about some of these exciting things that are happening in our market, and this technology having an impact on both the supply and the demand of space. But at the end of the day, one thing that is still a little bit troubling for somebody in my position on the research side is that the market data transparency is very limited. So we have great data from RCA in particular, and on the transaction side, when we buy and sell existing buildings, we have not great transparency on leases and rents at all. So this is a real problem, because how do we know that all of these trends are not already priced into the market, or even worse, when it's maybe not fully priced into the market, that it's already assuming too much growth.
But
and that is a real big problem.
You can always call Colliers.
Yeah, but you don't send me a spreadsheet of all the leases with all due respect. Maybe, yeah, you charge me a lot of money and I can't afford it.
Sure.
So the answer is no to that. I need real market transparency to make the intelligent choices that we need to make as an industry collectively, because we can each make our own choices, but that sort of behavior has led to the traditional boom and bust that we have seen time and time again. 20 years ago, people were talking about the great efficiency of having ceiling heights and to have the pallets moving around, and that was the innovation at the time. But the supply did get out of hand, and I think it would be better to focus a little bit more on market data transparency than only to focus on what the fundamental impact is. I'm not saying only, I'm saying just a little bit more focus on market transparency.
Okay, good. Did you want to pick that up?
Yeah, I think it is a characteristic of an immature market, for sure. That's challenging. I'm jealous about my US colleagues who have such a time series of 30 years of rent growth that we don't have. Indeed, it has to do with the transparency in all the markets where you see still reporting, where the rents still report in headline rents, as an example. A lot of people in the market don't know the concession levels in a lot of markets. So there is a lot of intransparency in the market what needs to be solved. And that's important to solve for sure. But I think it's a characteristic of a teenager adolescent.
Let's start with you, Hans. Just give us what you think will be the biggest trend and the best investment opportunity. You can choose one or the other or both in the logistics sector.
Well, I will go with Southern Europe over the next 2-3 years.
Okay, very good, very time efficient. I like that. Peter?
I would go to the, I think, Venlo area, because in the Netherlands, yeah, I'm a German, but I think this is one of the hotspots, one of the hubs, very friendly environment, very good location, low prices, so keep an eye on Venlo.
And I know you're a lawyer and can't possibly comment, but nobody's listening, it's fine, go on.
I'm going to go with a trend, and I'm going to say the impact of blockchain on the supply chain.
Ah, okay, interesting. Anthony?
I'm going to go with Spain. I think it's got fundamentally a restricted supply over the last 10 years. It's got virtually nothing available now. So if you can get control of sites and deliver those, I think you're going to be shooting fish in a barrel.
Excellent. Dirk?
I would go for France. Very depressed rents, but the markets are turning the corner. So we really see already pockets of rent growth, but we are only there at the beginning in this mature Western market.
Okay, that's fantastic.